Bitcoin is going to reset the entire financial system. This is like discovering Manhattan real estate in the 1800s or Apple shares in the early 1990s. In this video, I want to explain to you how Bitcoin is going to reset the entire financial system and how this is going to impact you if you do hold Bitcoin or if you don't hold Bitcoin. Let's get started. What I mean by reset is that Bitcoin is going to move wealth from old generations to new generations, the people who don't understand the internet to the people who do. It's going to move wealth from old assets, ones that we've used for hundreds or even thousands of years, to Bitcoin. All of it is going to move to Bitcoin. All of the monetary premium that we assign to every asset, real estate, stocks, all of it can potentially move to Bitcoin. We generally like real estate, stocks, bonds for all of their benefits, and each one does have its own specific characteristics and things that we like about them. Real estate is great because it offers cash flow and tax advantages. A lot of people buy real estate specifically for these two reasons. Stocks or ownership in companies works really well as well, but there's a lot more risk associated with it. And if you do have a longer time horizon, you could get a much higher return. You can also get dividends as a cherry on top as more cash flow. Bonds are specifically for anyone who wants to save for the short term. They don't want volatility and they want to have regular cash flows coming in. At the end of the day, the only reason why we need each one of these is because of inflation. Without inflation, we wouldn't need any of these assets. Fiat currencies are always going to lose value, and the financially literate and the wealthy are always going to move from their savings, which is cash, to investing, which is all of these assets that I highlighted. For example, real estate investors might tell you that they're doing all of this work because they want to provide housing to someone or because they want the cash flow. But the main reason for buying houses is to protect your wealth. You need to protect your savings because if you just hold cash, your wealth is going to disappear over time. Real estate investors require cash flow to offset the costs of carrying their properties and the maintenance required to even just hold the property without even having somebody living in there. The trade-off with buying real estate and getting cash flow, though, is that you're essentially forcing the liquidation of the time value of your property. So over time, you're getting cash flows and you're basically taking portions of your property off the market and you're using it to spend on things, you're using it to spend on your expenses. And over time, the property value does decrease because of deterioration. So you have to upgrade it. So when you consider all of these things, real estate is actually a very expensive way to store value. With stocks, you're taking a lot of risks. I mean, there's no real upkeep, there's no real maintenance cost required because the company that you're owning is paying for all of that stuff. But there are other risks involved. So for example, you have executive risk. You have people making the decisions for this company. This business is relying on certain people's decisions, and your investment, your savings rely on these people's decisions. So for example, if they have a short time horizon, if they just think about the short-term results and they don't care about what's happening in the long term, your investment could suffer because of their lack of thinking long-term. The main issue here is that people are confusing investing with saving. People are using these investments, which are supposed to grow in value, and they're thinking of them as savings accounts. They're thinking of houses as a way to save for the future because they know for a fact that the cash, the thing that you're actually supposed to save in, is losing value over time. Saving is just a result of deferred gratification. So when you spend less than you earn, you have a certain amount of savings. You earn a certain amount of money from your job, and you put that money into your bank account. You expect that money to be there at whenever you need it. So at some time in the future, you expect it to be there. On the other hand, investing is putting your resources into something that you expect will grow over time. So you expect a company to be able to earn more cash flows, or you expect the property value that you're holding, the value of the property that you're holding, you expect it to go up over time. Today, we're investing all of our savings. We're not saving, we're just investing. We're just blindly buying the shares of 500 companies in the US with the S&P 500 because we expect that those prices will go up forever. We expect that those companies will always have the same customers. Customers won't leave those companies. We're kind of making assumptions about where this company is going in the future when we have no idea. For example, if we move away from the dollar and the central banks in the world have no way of printing their own money, the entire system could change. When you're saving, you're expecting to get back exactly what you put in. So you don't expect any kind of growth. That's why gold has been such a great savings vehicle over the last thousands of years. The value of gold has been retained. Over the last couple thousand years, you could spend 1 ounce of gold and you could buy a fine men's suit. What this means is that gold is storing its value over time. It's giving you exactly what you put in, so it's not increasing in purchasing power. The reality, though, is that it gets easier to make suits over time. The technology to make suits, to put them together, gets easier, it gets better, and in reality, the price of the suit should be coming down. So gold is actually losing value. The reason for this is that over time, more and more gold can be added to the economy. So any savings vehicle that we have today doesn't really work the way it's supposed to. And most investors don't see the risks associated with the investments that they have. They just assume that the S&P 500 has worked for the last 50 years. It'll work for the next 50 years. We've always been able to save in real estate for the last few hundred years, few thousand years. We'll always be able to do that in the future. But I think things are about to change. The main characteristic that changes Bitcoin compared to all of these other assets is that, one, there's no forced liquidations like with real estate when you have to pay, when you have to get a rental check, when you have to get dividends from a company. That company is no longer able to invest that money in its future. So what these companies do is, instead of taking the risk of investing more into new products, they give you a dividend to entice you into continuing to hold their stock and continuing to increase the value of their stock. But what you're doing is you're slowing down the process of compounding. You're making it so that the company that you're buying isn't able to grow as fast over time because it's giving you some of its cash flows. When a company can just hold on to its cash flows instead of having to give it to you, it can grow much faster because it can invest more. Something like Amazon or Nvidia, if you look at their charts compared to companies that have been able to give dividends over the last 20, 30, 40 years, those companies like Amazon and Apple, even Apple has very low dividend, but those companies have grown much faster because their earnings are compounding over time. Over time, they're getting better. They're producing better products. They're finding ways to offer more value instead of being forced into giving you cash and liquidating their assets. The main difference with Bitcoin is that the time value of money is built into the asset. What this means is that because there's only a limited amount of Bitcoin, the amount of money that's added to the other parts of the system, so let's say more dollars are printed, all of that money is accounted for in the price of Bitcoin. Bitcoin's return also accounts for delay in gratification. So if you're waiting to spend your money, the value of your savings will continue to increase because that's just how Bitcoin works. There's only ever going to be a limited supply of Bitcoin, but everything else is abundant. We can create more food, we can build more houses, we can build more cars, but we can't make more Bitcoin. The time value of money is basically a payment for delaying gratification. In the legacy financial system, you can think of the time value of money as interest. Interest is the cost of borrowing money. With Bitcoin, you don't have to lend your money to get an increase in your purchasing power. You can just hold on to your Bitcoin and spend it in the future because you know for a fact that over the next 4 years, there's going to be less Bitcoin being produced, less Bitcoin being added to the economy. But on the other hand, every technology is going to improve and everything else will become more abundant. When you don't consume immediately, you're basically delaying gratification. Governments stop you from delaying gratification because they want you to spend money and they want you to increase the GDP in their country. If you spend your money, they get more tax revenues because when you spend your money, every transaction is taxable. So their goal is to devalue your money if you're not spending it so they can spend it themselves. They have created the economy that we're a part of. This economy is not real. On a Bitcoin standard, we go back to a real economy where consumers are spending because they want to, not because they're forced to. All of the value of the entire world will accrue to the value of Bitcoin forever. If anyone is able to produce goods and services, the value that they produce every time they create something is accruing to your Bitcoin. You can use your Bitcoin to purchase whatever you want, whenever you want, however far into the future you go. You know for a fact that there's only ever going to be 21 million Bitcoin. If you delay gratification, you know that your purchasing power will go up. Bitcoin is a reset of the financial system because it completely disrupts everything that we're so used to. We currently use multiple assets to save, and then we use one asset to spend. So we use currencies to spend, and then we use real estate, stocks, all those assets to save. The only reason why we have to do this is because we have currencies in the first place. Currencies are meant to lose value over time. So the people who are financially literate, the people who understand this, the people who see that their currencies are going to lose value over time, are buying other things instead. They're getting rid of their currencies and they're buying houses. They're buying things that are durable. So what Bitcoin does is it combines the saving and spending, and it makes one asset that you can use for money. Just in general, you can use it as money, and everything else is either a consumption good or a capital good. Today, the entire financial system is designed to help investors keep their assets while at the same time spending the money that they can get from those assets, the value that they've accrued over time. They're able to borrow against their asset. The only reason why we're able to do this is because banks can create money out of thin air. Banks are so ready to give out loans against properties and stocks, and this leads to a massive concentration of wealth because the people who borrow against their properties are never having to sell their properties. They can just hold on to them forever. Houses take a lot longer to build, but the loans against those houses can be created within minutes or seconds. What this does is it increases the demand for everything else as the people who are borrowing against their properties, their assets, their stocks, their bonds, whatever their portfolios are, the people who are borrowing against those assets are still consuming. They're not actually producing anything by having the value of those assets go up. They're able to buy things and consume without actually producing something. This is exactly what the financial system is designed to do. It's designed to give people loans so that they can keep spending more and more and more. Banks do this by allowing you to bring your future consumption to the present by giving you, let's say, a loan to buy a house or by giving you a loan to buy a car. What happens is it increases prices for future generations. It makes the price of everything go up. The price of houses has gone up significantly because people are able to bring their future consumption for housing to the present, and they're able to borrow money to buy their houses when in another situation where the money can't be printed out of thin air, you can't do that. You can't bring your future consumption to the present. When the world goes to Bitcoin as the world reserve currency, I have a feeling that all of these currencies are going to fall apart. We're not going to want to earn US dollars for the goods and services that we produce. We're going to want to instead have Bitcoin because we know for a fact that Bitcoin's value is going to increase. So what merchants are going to do is to incentivize payments in Bitcoin, they're going to maybe give discounts. Maybe they'll give 5 or 10% as a discount if you pay them in Bitcoin. There's also the other side of things where if an employer wants to hire an employee, they're going to have to pay them Bitcoin if that's the standard form of payment. If the employee wants Bitcoin, the employer is not going to be able to borrow dollars to pay them. They're going to have to actually accumulate Bitcoin and pay them that Bitcoin. So their savings will be going towards their employees. Today, those savings are just held by these companies because they just buy real estate, they buy stocks in other companies to store value for the future instead of paying their employees properly with, let's say, an asset or something that doesn't lose value. These companies are getting that option of continuing to hold their wealth forever. When Bitcoin is the preferred form of money, people aren't going to want currencies anymore. They're not going to want dollars anymore. There's going to be a point where one Bitcoin is worth $100 million because the value of Bitcoin is always meant to increase. As long as this thing works the way it's supposed to, the price of Bitcoin will continue to increase forever because there will always be more dollars added to the system. The US government has to continue adding more and more dollars to the system just to not go bankrupt. At the same time, fewer and fewer people are willing to give away their Bitcoin because they expect the value to increase in the next few years, the next few decades. They think it's going to increase in value exponentially. So why would they get rid of it at these lower prices? What this does is it lowers the supply of Bitcoin. It leaves the market with an excess supply of dollars. So the people who have dollars become more and more desperate to buy Bitcoin, and they're offering more and more higher and higher prices. That's how melt ups happen, where you see the market price of something go straight up. What's going to happen is businesses are going to earn in Bitcoin. They're going to save in Bitcoin, and then they're going to pay their employees in Bitcoin. What this does is it stops wealth from accumulating with a few people. The people who have Bitcoin are going to have to spend it. They're going to have to use it to be able to increase their wealth. They're going to have to either start businesses or they're going to have to buy something that'll increase their wealth, that'll increase in value more than the Bitcoin that they have. But at the same time, they're going to have to give away the Bitcoin that they have. They're not going to be able to have their cake and eat it too. They're not going to be able to keep their Bitcoin while spending it at the same time. In this world, things will be completely different because not only a few people will hold assets, everyone in the world will. When Bitcoin becomes the world reserve currency, everybody will be holding Bitcoin. They're not going to be holding stocks. They're not going to be holding real estate. The asset that everyone is going to use as money will be the exact same thing across the world. Right now, it's completely different. Right now, most of the world holds currencies because they don't understand that the value of the currency that they're holding is decreasing over time. It doesn't matter which currency you hold, euros, pounds, dollars, rupees, won, whatever you hold, the value is decreasing over time. There's only a select few people in the world who can buy stocks, who can buy real estate, prime real estate in the US, which is increasing in value, or Canada, or some developed country where the values are just going up all the time. Only a few people can do this. The entire world will hold assets on a Bitcoin standard. The entire world will hold Bitcoin. In the legacy system, we can see who's extracting wealth from society. I don't have anything against real estate investors, but real estate investors are specifically buying properties to take advantage of tax benefits so that they never have to sell and they don't have to pay capital gains taxes on their investment. They know for a fact that they can just borrow against the property and they can avoid having to pay any kind of taxes. So they keep holding on, they keep decreasing the supply of homes for people who want to buy them to live in, and they keep borrowing against their property to pay for their own expenses, and they maintain the property value with that borrowed money, and they just use real estate to consume without really being productive. I don't personally think that owning real estate is a productive activity because you're not creating anything. You're not solving a problem. You're not creating a new house, for example. You're using work from the past to exploit people into paying you rent. That's it. That's what real estate investing is. You know for a fact that your government is artificially going to decrease the supply of real estate by making it difficult to build homes. There's zoning, there's all these permits that are required, and it could take months to just get the permit to build a house. What you're doing as a real estate investor is you're hoarding the supply of something that everybody needs, which is housing, and then you're exploiting them to get them to pay you rent. So in the legacy financial system, the way that things work is you can own whatever assets you want, basically never have to sell them, and then just pass on the costs of all of your consumption to future generations with higher costs. Now, what's happening is Gen Z is having to pay more in rent than they're making every single month. The cost of real estate is going up because the people who own real estate are consuming. They're extracting the value out of that real estate, and then they're using it to spend in their own lives. A lot of people like real estate for the cash flow, but you can also do that with Bitcoin by just selling some of your Bitcoin whenever you need a little bit of cash. Right now, most people don't see Bitcoin as money, so you can borrow against your Bitcoin, but I personally wouldn't recommend that because it's extremely risky. If Bitcoin's price drops a significant amount, you could lose all of your Bitcoin because you took a loan against your asset. But when the world moves away from dollars, I don't think that these loans are going to exist anymore because dollars are going to be worthless. Why would a bank lend you money and then get paid back in something that they know for a fact will be worth a lot less in the future? The only way for this to work is if interest rates went up significantly. So let's say if you want to buy a house, if you want to get a mortgage, you can pay a 30% interest rate every single year. That probably won't be worth it because it's worse than borrowing with a credit card. When the world moves away from dollars, real estate is going to be a terrible investment. I think what's going to happen is people are going to use it the way it's supposed to be used. Instead of owners of homes renting the house to other people, they're going to live in the house. More and more houses are going to be owner occupied. People are going to love where they live. They're going to be more passionate about life. They're going to be happier. Real estate prices are going to drop because real estate is a depreciating asset. It's not supposed to go up in value. People are going to specifically use real estate as shelter. Over time, like I said, the value of real estate is going to decrease, and we're going to see a reset of everybody's wealth, how much wealth people own. What's going to happen, in my opinion, is that people are going to move this wealth from real estate into Bitcoin. Bitcoin is a purely monetary asset. There's no physical utility of Bitcoin. You can only use it to exchange value between one person to another, between a corporation to another corporation. It takes the monetary value out of everything else. You don't need to use stocks to store value for the future if you can just save in Bitcoin. In my opinion, what's going to happen is as more people figure out what Bitcoin is, they're going to move their wealth from the legacy financial system into Bitcoin. And this is going to lead to a massive increase in the price of Bitcoin. This chart right here shows you how much the value of real estate has dropped in terms of Bitcoin. It went from 64,000 Bitcoin for one house all the way down to 6.39 Bitcoin per house. I think this is going to drop another 99.5, 99.9%. One house is going to cost less than 0.01 Bitcoin, in my opinion, in the future, because more houses can be built, but there's never going to be more than 21 million Bitcoin. Right now, there are 2.4 billion houses around the world, and it's hard to find a house that costs less than 1 Bitcoin. That's because a lot of people are assigning value to real estate that shouldn't be there. Whenever we go from using the dollar as the world reserve currency to using Bitcoin as the world reserve currency, tax advantages for real estate investors won't exist anymore. The only reason why tax advantages exist is because the US government can print more money, it can borrow more money, and it can keep spending. These taxes that real estate investors aren't having to pay are subsidized by taxpayers, by savers. So what I think is going to happen over the next 20, 30, 40 years, investing in real estate is going to be one of the worst decisions you can make. I could be wrong on the timeline, but just based on the logic, the time that I've put into understanding this thing, maybe I'm wrong here, but I think over the next 20, 30 years, real estate is going to be a terrible investment. We're not going to need to buy excessive houses to save because we can use the currency to save. We can use the world reserve asset, the world reserve currency, to just save. If you don't get tax benefits on real estate and you continue to hold real estate as a savings vehicle or as a way to rent out to other people and earn cash flow, you're going to have to charge higher and higher rents until rent is no longer affordable and people just leave that area. There are, of course, going to be certain areas where people still want to live. Maybe the rent will be a little bit higher than the other areas, but in terms of Bitcoin, it's always going to decrease over time. I think the real costs of holding real estate are much higher than people think because today they can just borrow money to buy real estate. In the future, they won't be able to do this. They'll have to actually save to buy real estate, and it won't be worth holding that real estate asset because it's decreasing in value in terms of Bitcoin over time. And I think what's going to happen is we're going to see a lot of real estate investors move from real estate. We're going to have people who own hundreds, thousands of properties selling those properties because instead they'd rather hold Bitcoin. They'd rather hold the asset that they can use as a savings vehicle rather than having the headache of holding an asset that they have to maintain, that they have to pay to maintain, that costs them money over time. As the prices of real estate drop in terms of Bitcoin, we're going to see more and more real estate investors getting rid of their properties because it's no longer worth holding them. And what's going to happen is the people who spend time studying Bitcoin, accumulating Bitcoin, and putting it away will be able to buy houses for a fraction of what they're worth today. So that house that costs 6 or 7 Bitcoin today, eventually it'll cost less than 1 million Satoshis, which is 0.01 Bitcoin. So if you have a portfolio of 30 houses today, maybe you can get 200 Bitcoin for it. In the future, maybe you'll be able to get only 0.3 Bitcoin. This is the transfer of wealth that I'm talking about. This transfer of wealth is from the people who are stubbornly holding as many houses as they can, holding stocks, holding bonds, instead of studying Bitcoin, instead of moving some of their wealth. You don't need to move everything. Even if you move 1, 2, 5%, you're in a great position compared to a lot of other people. But the biggest transfer will be from people who own 0 Bitcoin to the people who own Bitcoin. There's going to be a point in the future where the people who own houses as an investment or a savings vehicle are going to be desperate to sell their houses because they don't need them. They'd rather hold Bitcoin and they'd rather have the freedom that comes with owning Bitcoin. As real estate investors choose to move their wealth from real estate to Bitcoin, as stock investors choose to move their wealth from stocks to Bitcoin, we're going to see the prices of everything decrease. We're going to see the prices of real estate, stocks, bonds, all these legacy assets, including gold. We're going to see the prices trend to 0 forever. We're going to see the price of everything like houses drop in terms of Bitcoin for a very long time. We went from 64,000 Bitcoin per house to 6.4 Bitcoin per house. Over the next 20, 30 years, maybe we'll see 0.0064 Bitcoin per house, which is 640,000 Satoshis. This is where I think the world is going. There are other ways that Bitcoin is much better than real estate. If you want to learn more, watch the video on your screen.